When you look at what the market has been looking at and the sell-off that we saw yesterday, are they worried that these restrictions or the lockdowns will last much longer than we thought? What are they actually worried about?
I think it's two things. First of all, it's clear that the hardest part of this recovery is ahead of us. In a sense, what we've seen so far, has been the easy bit. Secondly, it's the infection rates and particularly the hospitalization rates. That's what's going to drive the perception of how much of a lockdown or how much of several lockdowns we have coming down or what kind of lockdowns we might see. So it's really, once again, the paradigm of what we saw in the spring, where the public health system dominates or drives, rather, policy around locking down or restricting mobility and restricting the economy. Hopefully, we can stay away from full lockdowns, but we are going to see restrictions driven by the hospitalization rates.
Philipp, in this kind of environment, what can central banks actually do? If we're trying to slow down, economic activity, stimulus from the ECB would do what exactly?
Well, first of all, they have done an enormous amount, and they will continue to do whatever it takes. But I think the emphasis here is around fiscal policy, both to support the economy, but also to help transform it, and then manage the health aspect first and foremost. I think this is a first and foremost a public health support and transformation of the economy story. Monetary policy has done an enormous amount. They will do more if they need to, but the real story here is around the health policy and the structural policy of transforming and supporting the economy.
Philipp Hildebrand, off of the Eiffel Tower and across the Seine in the 16th arrondissement, there's a small institution called the OECD, which has held court on economics and indeed on the global landscape. They represent 1.3 billion people. You are being vetted, among others, to take over for Angel Gurria and drive that institution forward. Tell us how Switzerland fits into the OECD. As a nation of centuries of neutrality, is that part of the discussion of who the next director will be?
Well, that will be left to the countries, but I would to decide. But, I'm very proud to now be the candidate of Switzerland and have the support of the government. But obviously, if I were to be appointed to this job, then you're there for the institution, for the membership, not for your own country. You're there for all countries that are members. Switzerland is a founding member of the OECD and has traditionally been very, very engaged through working groups, through committees. I used to attend meetings myself. I used to chair one of the committees when I was at the central bank. So I think it's clear that for any small nation, frankly, multilateralism is incredibly important. The transparency is important. Openness is important. And I think the OECD is going to be in a very critical spot as we need to transform, ultimately, the global economy and address these long-term changes once we emerge out of COVID. Most importantly, I think climate change here is first and foremost the challenge we all face. And the OECD being focused on structural policy rather than monetary and fiscal alone is in an ideal position to play an important role there.
I take your point on that. And of course, part of this, Dr. Hildebrand, is the idea of making a more inclusive, or to finish the task of 1962 and indeed back to the 50s, where India and others are a little tentative on being part of OECD. What would be a mandate or a way to make the OECD truly more global?
Well, I think the OECD has been on an expansion course, rightly so. At the same time, it sets certain standards of democracy-based systems, market-based systems. And I think it's important to maintain those. At the same time, have a very extensive outreach program that plans for the long term. And I think Angel has done that very well, and I see no reason why that shouldn't continue. Global cooperation is on the back foot right now. It's very important that we reinvigorate it wherever we can. And that's good for prosperity. It's good for addressing inequality issues. It's good for growth. And therefore, I believe the OECD will be in a very important position in the years to come.
Philipp, I want to get back to the markets, but just on the OECD, one of the things that we've heard over and over again from Angel Gurria is the crackdown on tax havens. Is that really the best use of the OECD? If we don't have commonality or if people don't agree, then they actually can't do much with it.
Well, I think the tax haven story is a story of the past. That's past history, particularly the story around private banking secrecy, which, of course, as you know, was an important piece here in Switzerland. The country is now fully compliant with current OECD standards. You have full information exchange procedures in place. I think the real challenge going forward is fair and equitable taxation of global digital companies, where basically our national tax systems are clearly lacking. So the world needs an effective and new global framework on taxation fit for the digital age. If we don't get that, we'll see countries running in their own directions, often in conflict with each other, and that will undermine global prosperity.
Philip, what are you expecting from the U.S. election? I mean, I'm not asking you, voter turnout or who will win, but what does it mean for the markets? How much volatility can we see in the lead up to it and then in the immediate aftermath?
Well, the market remembers, of course, 4 years ago where you had an enormous amount of volatility. I think the challenge here is we have very different outcomes, very much dependent also not just on the president, but also on the Senate. And I think the outcomes, this is a very consequential election in so many ways, but also in terms of what it means for financial markets. You think of the fiscal piece, you think of the transformation, addressing climate change. These are you're going to have very binary outcomes, particularly depending on where the Senate goes.
I was talking with our EU banking team, Philip, and it's a really delicate question, and I'm going to you on this, not as former head of Swiss SNB, but really with BlackRock, almost in asset management and not in banking. Are we now with the pandemic, and now with this much worse pandemic of this month of October, at a true point of consolidation of EU banking? Are we at a point where the financial ratios are just untenable, and finally we need to see cross-border consolidation?
We do need a unified European banking market. I have argued this for years. I think that's clear. That's a very important piece that's still missing. Steps are being taken gradually, but it's being too slow. And until European banks have the ability to be clear about being able to operate at scale across Europe, they're going to be at a tremendous disadvantage. So I think, yes, it's coming. Yes, it has to come. There are still some obstacles, as you know. And it's critical for European banks to be able to consolidate and then ultimately operate at scale, particularly given the amount of investment that we're going to have to see on the digital front. So that alone requires to be able to operate at scale, and you can only do that if you can operate across the European Union. So I think banking union is absolutely critical for the future of the European Union.
Then do we need a little Schumpeterian clearing of markets? I mean, are we finally going to either take losses that literally can go back 13 years, or are we at least going to restructure and expand duration, lower interest rates, and do some form of cram down to clear the debt and debris away to get to a better productivity?
Look, a crisis always accelerates things, and that's true of COVID. I would say, though, even prior to COVID, it was clear that that's where we need to go. And if you look at the price-to-book ratios of European banks, even prior to COVID, it tells you that something in the structure of the European banking market is not right. So I think this is happening anyhow. COVID will probably accelerate it. We'll see what the losses will be ultimately down the road. I think the key is that the political system puts in place the right structure and the incentives for banks to be able to look at a scalable, comprehensive European market.
Philip, overall, are European banks too sanguine about the environment? So we're looking at lockdowns, and yet we have talk about dividends, resumption, and share buyback. And do they also need to just put aside more money for bad loans like some of the U.S. banks?
I don't think they're sanguine about it. I don't see any banker who's sanguine in the current environment, and that would be a very silly position to take on. Ultimately, what's going to happen is it's the cumulative loss of GDP that's going to determine how big this impact will be and how big a potential impact on the balance sheet would be in terms of losses going forward. We are now, as I said, this is the hard part of the recovery, and the number one priority right now has to be to get these hospitalization rates and the infection rates down. if we can achieve that, and I think the measures taken by the French, the German, the Swiss, and other governments in the last few days will hopefully achieve that. If we can do that, then I remain optimistic that we can prevent this terrible health crisis from mutating into a financial crisis, which was the part that was so terrible in 2008. So that's the key, and I think the measures that are being implemented right now as we speak in Europe will hopefully be constructive in this regard. And of course, we've learned, so this is not a total lockdown. I think it's very important to indicate that. We've learned, the authorities have learned from the spring, and they're trying to keep as much of the economy open as we reduce mobility, as we reduce infection rates, and as we improve the situation in hospitals.